Welcome back, it's Jason Walter here. In today's video, I want to share the latest housing market update from Realtor.com. They actually just released a new report today at the time of this video, which is the 28th of July. So I'm going to be sharing the latest update with you guys in today's video, and of course, give you some more insight about what's really going on with our housing market right now, because there's so much changes going on right now. So with that said, let's go ahead and dive right into the video here. And they're reporting, by the way, that housing inventory is up 30% compared to 1 year ago due to a pullback in home buying demand. So that's one of the things I want to go over today in today's video. And this covers the week ending July 23rd for their report here. So it says here, for the first time in 2 years, weekly data shows that houses are not selling faster compared to 1 year ago. I mean, over the past couple of years, houses have been selling faster than the prior year, and that's why housing inventory was basically depleted over the past couple of years here. But as they mentioned here, houses are not taking longer to sell. They're basically selling at the same time compared to 1 year ago. However, the current trends right now is indicating that we're going to be seeing houses sitting on the market longer compared to 1 year ago in the weeks ahead. On top of that, home prices have not really retreated very much so far this year. And we do have a shifting in our housing market though, and we have this shifting dynamic from a very, very strong seller's market moving towards a buyer's market because housing inventory has been increasing greatly. We're seeing a lot of price reductions as well. And Realtor.com is basically saying here that because of this housing market shift we're seeing right now, that may give home sellers less motivation to sell because we're seeing less new listings hitting the market from a year ago. In fact, for the third consecutive week, we're seeing actually fewer homeowners deciding to list their houses for sale. But despite the fact that we're seeing less new listings hitting the market over the past couple of weeks here, or past few weeks, I should say, active inventory or housing supply has been increasing due to a pullback in home buying demand. Because we have more houses listed for sale right now, it says that home shoppers or home buyers right now have more options available to them. So on a side tangent here, yes, it's great to say that we have more houses listed for sale, giving more home buyers more options, but this right here, home prices have not retreated. So they have not come down very much. We're still at very high levels. I actually did some digging for you guys and found out that compared to this time in 2019 compared to now, home prices on average have increased about 40%. So we have a long ways to go in order to have a more market that's really conducive for home buyers right now because home prices have increased so much. And of course, we have a big increase in mortgage rates as well, which is causing a lot of headwinds for buyers right now. But I will have to say that this is a step in the right direction, maybe a baby step, because we have more options for people looking to buy a house right now, which is obviously a positive sign. On top of that, mortgage rates have been decreasing for about a month and a half. With that said, let's talk about home prices on a national average. I always say this. Every housing market's different, right? You may have an area where your housing market is in full swing. You may have other areas where you're seeing a lot of price reductions. So it just depends on where you live. These are just national averages. So the median asking price grew 16.6% over last year. This is the median asking price in which home sellers asked for their houses for sale. So that grew 16.6% over last year. Historically speaking, this is still very much elevated. It'd be more normal to have price gains in the range of 3 to 6%, and of course not 16.6%. And this increase in home prices is up from last year by double digits for the 32nd consecutive week. And it says here, asking prices continue to climb. I would add an asterisk there saying they continue to climb on a year-over-year basis, even though they're starting to see a decrease in home prices compared to 1 month ago, for example. So this is on a year-over-year basis what they're talking about here. But because home prices still remain very much elevated compared to the past couple of years especially, buyers are unwilling or unable to match their initial price in this market. I should say here that more home buyers are unwilling to pay these high home prices here, and we're seeing that based on price reductions across the United States here. So according to Realtor.com, the share of listings with a price cut, in other words, a price reduction, was nearly double 1 year ago, but it still remains well below pre-pandemic levels. I'll have to say that it depends on your source. So have a look at altosresearch.com. So this is the percent of properties that are listed for sale that have had a price reduction. So according to altosresearch.com, the most recent data they have is for the 7-day ending July 22nd. Approximately 35% of properties listed for sale have had price reductions. And this is almost double compared to 1 year ago, because at this time 1 year ago, the share was about 23%. So right now we're at 35%. Back in 2020 though, the share was 25%. And back in pre-COVID levels, it actually was 35%. So it just depends on what source you're looking at. According to altosresearch.com, we have far more price reductions right now compared to 2021 and 2020, but we're actually on par with pre-COVID levels back in 2019 at this time of year. So one thing I want to mention, and actually we're just playing around with these numbers here, is that yes, we have nearly double the share of price reductions compared to 1 year ago, but have a look at this because this is more of a telling story. I think this is really the headline we should be focusing on, because for the 7 days ending April 8th of this year, the share was only 17.5%. So in other words, ever since April 8th of this year, the share of price reductions has basically doubled. So in other words, over the past 4 months, the share of price drops has basically doubled, which is pretty mind-blowing. All right, so going back to this report from Realtor.com, here's one thing I want to mention regarding home prices, because we're talking about the median asking price, the median listing price. So even though a home seller asks for $900,000 for the house, doesn't mean their house is going to sell for that. So just keep that in mind. We're talking about the median asking prices. This is only based on the asking price in which home sellers are asking for their houses. And because the asking prices have been increasing on a year-over-year basis, and we're seeing a giant increase in the share of price reductions, clearly home sellers have not gotten the memo that our housing market is shifting, right? So just want to point that out. Even though you're asking for whatever dollars for your house, doesn't mean you're going to be getting it. These are not sold prices. Anyways, let's go on and read on to this report here. Let's talk about new listings and also active listing inventory. So new listings, which of course is a measure of home sellers, listing their houses for sale, is actually down 6% from 1 year ago. And this week marks a third consecutive year-over-year drop in the number of new listings coming up for sale. So in other words, for the 3 consecutive weeks, we've had a decrease in the number of new listings hitting the market compared to 1 year ago. Obviously, we need a lot more new listings hitting the market, though, in order to have a big gain in active listings or housing inventory. But as I mentioned, because we're seeing this fallout in home buying demand, active listings overall have been increasing greatly across the United States. Because of this shift in our housing market right now, Realtor.com is saying after several years of unquestionably calling the shots, sellers face a new market position. I would say, in other words, saying that we're moving from a very, very strong seller's market towards a buyer's market, because buyers are getting more of the upper hand on home sellers right now in areas especially where we're seeing this giant increase of housing supply. So we're seeing a decrease of new listings for the third consecutive week here, but active listing inventory, which of course is housing supply, the total number of houses for sale, actually grew 30% from 1 year ago. This is obviously giving more home buyers more choices right now, but of course, as I mentioned, home prices still remain very, very high, so it still remains a challenge for home buyers right now. So even though housing inventory is up about 30% from a year ago, active listings or housing supply remained less than half its June 2019 level. Today's shoppers have more options, but the market needs even more before the selection is on par with pre-pandemic levels or even the early pandemic housing market. So one thing I want to mention regarding this, and I mentioned this quite a few times on the channel now, I used to think we need to see housing supply to be at 2019's levels in order for a more balanced housing market. But clearly a lot of data is suggesting, especially in areas where housing supply has increased greatly this year, we don't need to see inventory levels to be at 2019's levels in order to have a balanced housing market. This is because we've had record low housing inventory this year. If we were to shoot up to 2019's levels, that would potentially crash this housing market. So let me just share the latest trends according to altosresearch.com for housing inventory. So right now, according to them, we have about 526,000 houses for sale for the 7-day average ending July 22nd. 1 year ago, it was about 403,000 houses for sale. So by my dumb math here, that's a 31% increase from 1 year ago. The bigger picture though is this, because active listing inventory was about 250,000 back in the middle or the end of March really. So what I'm getting at here is that we basically have twice as many houses listed for sale right now compared to the end of March. And as you can see here, the levels right now of housing inventory at 525,000 is far less than pre-COVID levels, because at this time in 2019, we basically had just under 1 million houses for sale. So if we were to move from, let's just say, all-time record lows of 250,000 houses for sale all the way up to 1 million houses for sale. In other words, housing supply would basically have to increase by 4 times the amount. That would crash this housing market. So let me share a brief example with you guys, and then we'll move on to the rest of this report from Realtor.com. So here's active listings according to Redfin, and this is for the 4 weeks ending July 24th. So according to Redfin, so right now we have approximately 800,000 houses for sale in the US. Compare this to 2019, have a look at this. So at this time in 2019, we had just over 1.2 million houses for sale. So that's a difference of over 400,000 houses for sale. So we have 400,000 less houses for sale right now compared to this time in 2019. But despite that, have a look at this. Here's price reductions. So price reductions right now, even though we have far less houses for sale compared to 2019, we have far more price reductions. So the share of price drops right now is at 7.5%. Compare that to 2021 at this time, the share was about 3.4%. So we basically have twice the share of price drops right now compared to 2021. Also compared to 2019, we also have almost twice the share of price drops, even though we have far less housing inventory compared to 2019. So what I'm getting at is I'm really not focused too much regarding housing supply right now and how that compares to pre-COVID, because the trajectory has basically been going straight up, and we're seeing this giant increase of housing supply, which is really impacting our housing market right now. Anyways, let's go on to read on to this report here. I actually want to show you days on the market and much, much more here. So here's a table summary of what we just went over here. So here's year-to-date numbers. And by the way, all these numbers here are changes on a year-over-year basis by week. So for the week ending July 9th of this year, the median asking price or the median listing prices were up 15.9% compared to 1 year ago. And as you can see here, the home prices or the asking prices has been more or less flat over the past few weeks. But let's have a look at new listings. The number of new listings year to date is basically flat compared to 1 year ago. We were actually down 6% for this week, down 3%, and then now down 6% again for the week ending July 23rd. So for the third consecutive week, we've had a drop in the number of new listings hitting the market. But despite this, we are seeing an increase of housing supply, up 30% from 1 year ago. And because home buyers right now have more options of what they want to buy, and also we're seeing this pullback in home buying demand, houses are selling just as fast as they did 1 year ago. But the trend line is going downward though, because for this week, houses sold 1 day faster, again, 1 day faster as well. But for this week, actually selling at the same pace 1 year ago. So this trend continues. We should expect that houses are going to be sitting on the market longer in the weeks ahead. All right, changing gears slightly, I actually want to share a new report from Freddie Mac that was actually just published today as well. And they're reporting that the average 30-year fixed rate mortgage in the US right now is 5.30%. This is obviously much lower than the year-to-date highs that we basically had in the middle of June when rates were over 6%. So according to Sam Cater, who's Freddie Mac's chief economist, he stated the following here. Purchase demand, in other words, the demand for people submitting loan applications right now to buy houses. So purchase demand continues to tumble as a cumulative impact of higher rates, elevated home prices, increased recession risk, and declining consumer confidence are taking a toll on home buyers. It's clear that over the past 2 years, the combination of this pandemic, record low mortgage rates, and the opportunity to work remotely spurred greater demand. Now, as the markets adjust to a higher rate environment, we are seeing a period of deflated sales activity until the market normalizes. So in other words, the market right now is adjusting to these high mortgage rates, and because of this, we're not seeing as much home sales and also pending home sales right now in this marketplace. So comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.